Hi, I'm Diane Gertis. I'm with themortgageadvantage.com. It is June 27th, 2014. So how does wine affect our interest rates? First, who decides or what decides our interest rates? That would be the 10-year Treasury bond. The treasuries are sold by the U.S. Treasury Department, and they are sold in order to pay our extensive debt. The 10-year Treasury are sold at auction. If the demand is high, for instance, there's a lot of global unrest, there is icky economic news, we're in financial turmoil, there's a lot of demand for the U.S. Treasuries, the 10-year notes, then our interest rates come down. If there's not a lot of demand, for instance, the economic news is rosy, therefore entities will put their money into other investments other than the low return treasuries, then our interest rates go up. This week has affected the bond market for a couple of reasons. Let's start with global. The unrest in Iraq, the ISIS, who the Al-Qaeda is disavowed? Wow, but political commentary this is not. And Russia, because of their military actions, as a result, it has sent a lot of other banks and investors flocking back to the U.S. and to invest into our bond market, therefore keeping our interest rates low. The other has been our dismal economic news and surprising economic news. I mean, we're just like a big ping-pong game. One day it's good, one day it's not. The durable goods orders came out this week. And the durable goods orders are, for instance, consumer goods that are used over a long period of time, such as refrigerators or cars, unless you have a 17-year-old who, like mine, went through cars like Fruit Loops. The numbers were very low for May. But the shocker was the gross domestic product for our first quarter of 2014. The gross domestic product is for products that are manufactured and sold within the U.S. borders. Our first quarter was so dismal. I mean, and this is products like wine and stuff. It matched the first quarter of 2009, and we were in a recession at that point. But they blamed the weather and they blamed Obamacare. I mean, there's always blame to go around. Nevertheless, it was still low. Between the global unrest and with the economic numbers, and therefore that has kind of taken away the sting of the Fed, because the Fed, was spoon feeding by buying a lot of the treasuries to keep our interest rates low. As a result, the interest rates have not jumped up to 6% like everyone thought they would. Because of all the global and the financial, it has kept our interest rates where they are today. Where will they go? I don't know. Everybody has their own crystal ball, and everybody, there's all the different kinds of the side of the net, because it also, the housing market seems to be improving. I mean, the prices have stabilized and people are out buying homes, and the unemployment numbers have come down. So no one knows really where our economy is going, where it's headed. But one thing is for certain: until it stabilizes, our interest rates will stay low. What can we do in the meantime? Oh, well, that's easy. You can drink more wine, either bottled or boxed if you drink. Have a great weekend. Go USA!